Hello traders, welcome to FreeFX. We have another interesting week ahead of us. So as I mentioned in my video at the end of last week, we are in the week for the FOMC rate decision, and also we have CPI tomorrow. Therefore this makes this particular week at the end of the year quite an interesting one. Now if you're in the US watching this, obviously this is a very important month. Taxes get done sort of before the end of the year. If you're in the UK, that's different because the tax year starts and ends at the beginning of April. So there are different considerations in America than there are in the UK in terms of your sort of tax, and if you think of money managers and how they wrap things up. But that's not my field. I just sort of regurgitating things that actually came up in the conversation with Andrew Gaskill, the trader that I interviewed a few weeks ago. So why is this an important week for us and for everybody watching? Because tomorrow, as I said, CPI hotly expected to be even lower, 7.3 and then 7.7 before. We're in the 8s before, so we've come down a little bit. The excitement is palpable, but actually there's not been that much movement to indicate that there's a real sense that this is the resolution of all uncertainty. And the core as well, as you can see, it's mildly predicted as going down a little bit, but it's not that much lower. So you just kind of had to take it with a pinch of salt. And then we've got the FOMC rate decision coming up, obviously not long after, because it's literally the day after. So that means we might get a very muted response to the CPI, because that's the nature of forward-looking price, etc. So we are where we are. This is where we're going to look at different charts, trying to make sense of where we are. I'd actually like to start with this one today because we've made a move higher. That's the daily. You can see we came off the 100-day and we're going towards the 200-day, kind of sort of trapped in that range. The median line there, if you like, the purple line, is the basis. That's from Bollinger Bands. We came off sort of the lower Bollinger Band. We've gone on to reach the basis, but not the 200-day moving average. That's kind of the day's action, which finished just a few minutes ago. If you're watching, I'm based in the UK, so 10 o'clock is where this is at. So 10 p.m. it ceases to move for an hour. So that's basically the candle formed there, and we don't have to really talk too much about that. The other thing is the CCI is kind of curved slightly upward, so we are kind of still under the zero line. And what's significant about that is that we've been above the zero line for quite some time. In fact, we came above it just here. If you can see, that was back in October, 16th of October. We started moving higher and we've been above that. So it's been 2 months essentially of this change, and we've returned below not the 200-day moving average but also we've returned to the sort of sub-zero on the CCI. And you can kind of sort of look back and try to make sense of it by saying that, well, when was the last time we came back down below it? It was all the way to the 21st of August 2022, and that means we 21st of August and 16th of October. So it's 2 months. So we could say, based on the last experience, the last sample, we could sort of expect 2 months of being in the negative CCI area, which would signify that we are going to have these movements within a downtrend rather than movements upwards with high highs and high lows. So we may see low lows and lower highs. Now, what's really not convincing at the moment is that the ATR is sort of plummeted, and in a way, this sort of dropping ATR, generally speaking, would signify higher moves, and it's sort of taken a while to respond. at the same time as that, generally speaking, you know, as you can see, the momentum indicated that the ADX and the ATR generally follow the same pattern, but they don't always match. So just to give an example, see that they kind of follow the same pattern there. But this one, for example, is an example from the 17th of October. The ADX started declining before the ATR, or we have this steep decline here. The ATR was sort of holding up slightly better, but essentially they have a similar kind of, but the ATR is more directional in a way, because it tends to rise when there are moves to the downside, and vice versa. So the fact that we've sort of come down here to these sort of levels, we're at 65 at the moment, so sub 70, I've taken from my sort of very small sample studies to be a signal of not being bearish, quote unquote, for something like the S&P 500. So if this is bottom for the ATR and it starts to rise again, then this break that we had below the 200 and back below the 4,000, etc., might gather momentum. So the other thing, again, we checked this late last week, is the advanced decline. Again, we've not seen really an advance. We're still in a sort of realm of declining. So advanced declining is net advancing stocks minus declining stocks. So it's kind of net declining, if you like. So that tells me there's not really a conviction to that. And so essentially we have this slight divergence between different indicators, but on the whole, I would say this is pretty accurate. Now, if you look at the Bollinger Bands, we've looked at them before, but I'll just kind of show you again as well the WMA, just for we're just underneath it, and we were above it for quite some time. We broke below it, and then we're just pressing back against it. So it seems to be that it wants to go there. Now, previously when we actually broke below it, we tried to rise above it, but essentially we had this slight peak, and then we didn't quite manage to stay above. It's just an average, so it's not really responding to the average, rather the average is responding to price. But you know, what came first, the chicken or the egg? So it's a difficult one sometimes to surmise. Other significant things, I'd say, if we take that off and bring back the Bollinger Bands, as I said before, we're just below, and we arrived at the basis, so we need to see what happens. But if I go to the futures there, just kind of, I was looking at this trying to get something, because sometimes when you're in a situation like this, all you need is a big event to kind of be a catalyst for price. But in the meantime, what this stall kind of provides you with is an opportunity to think, is there anything that one can look at which might give us a clue as to some kind of price misalignment or mispricing, or some sort of some kind of clue as to what the price is meant to be doing but isn't, or something hidden within price. So basically dissecting price. For example, somebody mentioned, it was Michael Kramer on Twitter, that you know, CPI, there's a health insurance kind of component to that as well, which, you know, gets accounted for sometimes and sometimes not. Anyway, so that there are obviously different components to price within the CPI in terms of where inflation is the biggest and where it's the smallest. And equally, when it comes to volume, for example, here's the chart of the futures for the S&P 500 E-minis December contract, ESZ. That's where you're at. And the hourly is very important because it shows you clusters of volume, much more so than a daily. In a way, it gives you also a sense of where during the day we're seeing the most action. And if we look back to that Brookings Institute speech from Powell, right to the left there, you can see that there was that big volume, 3 volume bars, big rise there from just 3,950 to 4,100 pretty much. So that's pretty impressive. But if we look at the volume here, the up-down indicator here on the future side, you can see that we've got essentially net positive or net green volume, and the sellers volume was smaller. Other times it's quite difficult to really see and gauge that in terms of what sentiment, and it's really quite tricky. So just looking at the volume bars, it doesn't really give you a sense of where we are, but if you look at the breakdown, the up down, it sort of gives you a better breakdown. If you look at the daily for that, it does give you a clue as well, but we don't have much data because that's just the December contract, so they don't start really until this point. In terms of the up-down volume, that's the 14th of November, and that's kind of the continuous contracts, and then we get into December here. So the 30th of November, you can see that, as I said, the Brookings Institute speech or talk by Powell, and then we get, so what happens actually with this is quite important, I think, to highlight if you're not really getting a sense of why we're talking about this, is that we get the futures volume here, but it's colored the same color as the close. So if you closed red, the bar will be red, and green is green. So this instead gives you the positive and the negative volume, and the little green line is the net. So if you take the that green bar minus the red, and then it gives you the sort of size of the total bar. And that's kind of what's shown in these figures. Just to my where it says up-down volume, gives you the green, the red, and then a sort of the net. So what's really significant about some of these is that it's quite well balanced. So if you look at this last one for today, it gives you 283k positive, 233 negative. So essentially it's positive by 49.9k. So slightly positive, but not that much positive. So when you look at the candle itself, it looks like a holy green candle, but actually there's been a lot of selling as well, or comparatively, it's half and half almost. And so that means it hasn't really had much of a run compared to this one here, where we had overwhelmingly buying pressure, buying volume. So that kind of gives you that big move, and it's important to reflect on that, and so it's quite a restrained move essentially. So I'm just going to finish with that because I don't have anything else to say, except that if you look at the weekly, again we are in this stall, and it's slightly skewed things because we had turned here and we had made the first red candle just like previously in these moves. So we need another big red candle, and you need to go really and check the daily action for these weeks. So the week of the 22nd was a big red candle. So the second red week, we've had one red week. Second week started on the green, but what happened on the 22nd of August? We'd have to sort of go and look and see what exactly happened on the 22nd of August and the following days, so we get a sense of what the week actually was made of. So if I look back, that shouldn't be difficult to find out. 22nd of August was 22nd was the Monday, was a red day. The Tuesday was very small. The Wednesday was green, small, and the Thursday, by the Thursday we'd actually basically almost erased most of this beginning of the week down move. And then on the Friday the 26th of August we had this big down move, Friday 26th of August. Now if I look at my FX again, and just had a look at the, actually I don't want to see that, I want to see the economic calendar. So 22nd of August week, if we just have a little bit of a change to that and make it the 20, there we go. So the week of the 22nd to the 26th, and apply, and we can see what actually happened. What data was being released? Why did it move down on the last day? So, composite manufacturing PMI, we had the sort of down move on the Monday, then not really much conviction, up move on the Thursday. The up move on the Thursday, Jackson Hole was the Thursday. Okay, so Jackson Hole was Thursday here, 25th of August. 25th of August, okay. Jobless. The Jackson Hole, Powell really tried to bring home the message that, the Fed was all about combating inflation, etc., etc. On the Friday, Jackson Hole Economic Symposium was, I think that's what happened. It was the day where Powell actually spoke, and that's kind of why there was a move on that day. Fed Chair Powell's speech, 2:00 p.m. So that's why we had this move. Okay, so it was important to look back. So this week, equally, what we're going to see is we had a sort of greenish day today, but as I said, not much conviction. A very narrow range. If you look at that, the low was 3922 and the high was 3990. Okay, so we're talking about 68 points, and we've got another 4 days, of which Tuesday CPI, Wednesday FOMC. So that will kind of shape the week really. So it'll be an interesting week. So thank you very much for watching, and tomorrow I have the pleasure of making contact with another trader for another interview on here on FreeFX. So please tune into that as soon as it's released. I will be delighted to share that with you, and I hope you'll find it interesting. So until then, thank you very much and good luck trading out there.